Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dana Inc. quarterly report. Dana Incorporated offers a diverse range of businesses and services that cater to various industries. These include drive systems, axles, drive shafts, transmission, wheel and track drives, motion systems, winches, slew drives, hub drives, electrodynamic technologies, motors, inverters, software and control systems, battery management systems, fuel cell plates, sealing solutions, gaskets, seals, cam covers, oil pan modules, thermal management technologies, transmission and engine oil cooling, battery and electronics cooling, charge air cooling, thermal acoustical protective shielding, digital solutions, active and passive system controls, descriptive and predictive analytics. These services are provided to vehicle manufacturers in the global light vehicle, medium/heavy vehicle, off-highway markets, as well as the stationary industrial market. The skyrocketing stock price of Dana Inc. A year of strategic announcements and financial growth. Dana Incorporated's DAN's stock price has experienced a remarkable surge over the past year, with increases ranging from 105.27% to 146.36%. This upward trend can be attributed to several key strategic announcements and positive financial developments. The sale of its off-highway business for $2.7 billion in June 2025 was a significant catalyst, unlocking substantial value for shareholders and streamlining the company's focus on light and commercial vehicle customers. Additionally, Dana's cost-cutting initiatives have yielded impressive results, with annualized savings projected to reach $310 million by 2026. The appointment of Bruce McDonald as Chairman and Chief Executive Officer in November 2024 also bolstered investor confidence. Furthermore, the company's positive financial results and upgraded guidance for 2025 have contributed significantly to its stock price growth. Multiple analyst upgrades and raised price targets have further fueled the momentum, with firms like UBS, Barclays, JP Morgan, and RBC increasing their targets throughout the year. The combination of these factors has created a strong positive sentiment around Dana Inc.'s stock, driving its remarkable growth over the past 12 months. The primary drivers of revenue growth or decline are multifaceted. Key factors include the sale of the off-highway business, which has a significant potential impact on revenue. Additionally, cross-currency swaps and undesignated forward contracts can also influence revenue. Upfront payments from customers for new business programs, rebate incentives in customer contracts, and cash deposits made by customers with cash and advance payment terms all contribute to revenue growth. However, cost reduction initiatives are expected to deliver annualized savings of $310 through 2026, which could potentially offset some of the revenue growth. Regional economic growth rates, industrial output, and commodity prices also play a significant role in determining revenue trends. Overall, these factors interact with each other in complex ways, making it challenging to predict future revenue outcomes. Net income and profit margins. A shift in fortune. The financial summary reveals a mixed bag of results for net income and profit margins. Initially, net income decreased by $3 months and $9 months, primarily due to the off-highway business divestiture transaction, related costs and loss recognized on disposal group held for sale. However, from 2024 to 2025, net income saw a significant increase of %. This upward trend continued in Q3 2025, with an increase of $42 compared to the same period in 2024. Additionally, there was a modest increase of $10 in another quarter. Profit margins also underwent changes, albeit not as clear-cut. While no specific information is provided for the overall change in profit margins, gross margin saw an increase of $44 and 230 basis points from Q3 2024 to Q3 2025. This improvement was attributed to cost reduction initiatives, material cost savings, and operational efficiencies. The divergent trends in net income and profit margins can be attributed to various factors, including the divestiture transaction's impact on net income and the company's efforts to optimize its operations and reduce costs. The company is indeed generating positive operating cash flow. The financial summary clearly indicates this trend. A closer look at the numbers reveals that in 2025, operating activities produced a total of $483, which is an increase from the $367 generated in 2024. This upward trajectory suggests a healthy and stable financial position for the company. The company's financial situation has undergone some notable changes over the past year. While there were no significant alterations to its debt level, a closer examination reveals that the company did take on new debt through the Term A facility and made adjustments to its revolving facility. However, these changes do not appear to have had a substantial impact on the overall debt level. A more pronounced shift has occurred in the company's interest expenses. The introduction of floating rate facilities tied to SOFR plus margin has led to an increase in interest expense from $38 in Q3 2024 to $47 in Q3 2025. This change is reflected in the company's financial statements, where interest income and expense have shown a notable difference between 2024 and 2025. In summary, while the company's debt level has remained relatively stable, its interest expenses have experienced a significant increase due to changes in its financing arrangements. The company's financial performance was marred by poor results across various regions. In North America, Europe, South America, and Asia-Pacific, the company experienced a decline in organic sales, with the Asia-Pacific region being the worst performer, experiencing a 15% decrease. The only slight variation was seen in Europe, where excluding currency effects, sales were down by 5%. Overall, these regions failed to meet expectations, indicating a need for improvement in their strategies and operations. Management is outlining a significant shift in the company's strategy with the sale of its off-highway business to Allison Transmission Holdings. This move aims to create a more focused and agile Dana by divesting non-core operations. The company expects annualized savings of $310 through 2026 from cost reduction initiatives and plans to use net cash proceeds to pay down debt and return capital to shareholders. Additionally, Dana is implementing segment realignment and emphasizing sustainability and efficiency through various technologies to enhance its go-to-market approach. Acquisitions and divestitures overview. The company has made significant transactions in the past year. Notably, it acquired Switch Mobility Limited on June 6, 2025. In terms of divestitures, the company sold its off-highway business to Allison Transmission Holdings, Inc., marking a strategic move to restructure its operations. Additionally, the European hydraulics business was sold to HPIHS, RL in February 2024, although the transaction was not completed as planned. Furthermore, the company divested its ownership interest in Axles India Limited and Dongfeng Dana Axle Co., Limited, indicating a shift in focus towards other areas of the business. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid out dividends to its shareholders, as indicated on pages 9 and 33 of the report. Secondly, it has also implemented a share buyback program, with evidence of this activity found on pages 10 and 36. Concerns about inventory buildup and supply chain disruption. There are growing concerns about inventory buildup and supply chain disruption. Lower production volumes in key regions such as North America and South America have led to decreased electric vehicle product orders in Europe and Asia-Pacific, resulting in lower light vehicle sales. Furthermore, the company has used cash to fund higher inventory levels, indicating potential issues with managing stock levels. These factors suggest that the supply chain is facing challenges, which could impact future operations and profitability. That concludes the financial summary for Dana Inc. Feel free to comment below, and I will be happy to answer them when possible.